Hello, hello, hello. Good morning. Welcome to another ES Futures Trading stream. Today is Friday, the 3rd. It is Monday, 8:50. It is 8:51 a.m. Okay, let's take a look at what happened or what's happening in this market right now at this very moment before doing a review of before doing a regular review of our monthly, weekly, and daily charts. Okay, we got overnight inventory that is 100% short. You can see where this where the overnight session has been sold from. It's been selling. It's been sold from one, two, three, four, five, six times. You can say maybe even six times from seller. Really low odds of these highs to remain there. A high odds market trading back towards these highs, at least to repair these highs. And the same thing is going on in the lower side as well. There's a lot of buying that was coming from the base of the spike, this spike that happened on Friday late in the session. And notice how many times has been sold also. One, two, three, four, five, six times. Pretty much sold from the same level down here. Volume, yeah, relatively low. It's low relative to previous days, to the whole week, to the whole previous week. What we have today, we don't have major announcements and major news. No, actually we do. We have PMI at 9:45 a.m., ISM at 10 a.m. During the week, we have ADP here, PMI composite final down here. Jobless claims, this is the final from last month. Um, Employment situation. Oh, what happened here? I thought there was non-farm payroll here. Yeah, well, let me see. Unemployment rate, non-farm payroll, but this falls in Good Friday. All right, that's for the week. No, another major news that can bring volatility to the market. Try to be aware of what's happening or what can happen, and especially particularly the times. And let's take a view. I was I put this in my homework last Friday. Last Friday, when we have this market, I was having some problems early in the morning because my charts didn't upload. And when I could fix I could have some a stable chart when my charts become stable. The market already took this high and took the 4100. But the most important thing that happened during this opening on Friday was that the market couldn't close the gap. Really was it didn't close, right? Basically, it was bought from overnight high back with one tick from closing the gap. Um, Having in mind that the previous day on Thursday the gap wasn't closed. Again, one tick from closing the gap and an enormous gap on Wednesday as well. Having a non-excess here, having a poor low here, basically a weak low down here. The odds were that I was watching this very careful because the odds were that if this gap was closed, the downside, the potential to the downside was really good to the downside. But remember, another thing um happens happened on Friday as well. Friday was end of the week. Friday was also end of the month at the same time. So you have those two things. So, we have options. Remember that there is this strategy that's widely used in the option market that is selling naked calls and naked options. Selling naked options, basically. Selling naked options is, I believe, is the worst strategy you can ever ever have. It's the worst thing that you can do. Just imagine what happened here in this market if we have this daily this market that was down here, right? Down here, coming low. It is impossible for the market to but will come back up here. It's impossible, right? So just start selling these options. Um, and this thing just happens, right? We never know when this is going to happen. I was I was very aware of that on Friday, not at the opening, but later on when the market has this incredible rally here to the upside. It was short covering. This was absolutely short covering here. And when the market has this when it have kind of like this huge rallies to the upside, this pullback low here are not are not um are not rare, right? Because this allows the market to come in balance, to and the market gets too long, so it removes some of the long inventory, so the market can rally higher. And while the market, what was happening here at the time when this was happening, we got the market was around this high, between these two poor high here, very close. The market had repaired this high, has this one as a next reference, has the gap here, and something that we talk a lot about on Friday was also that. Let me see if we can do some recovery. The market re-enter was the potential for coming back to this range. Once the market comes back to this range, has a breakout. We had this breakout of this range low. Can you see the lower range here, a lower range up here? You know, the potential was the market coming to the half back here. It was 141.32. I guess we talk about that possibility. Also, not that the market was going to go there, but just to be aware what references in the upper side are or where if something like this happened, right? So the potential for this one, the market finding some selling around half back of this range were there, and that's why um, I have this market. I didn't have this at the time. This is for 132. I just put it there, but this trade is over. It's done. All right. I missed the trade here, but once you have the message of the market, right? The market delivered a message here by not doing something. This gap was really close, really small, relative to the previous day gap. Can you see how big this gap here and was close, right? Of course, is going to be close. It's so small, right? But the market did not. Market did not close, and you we have a late, not really, but the market rallied pretty much all day long. And the most important thing to me, all the things I'm monitoring now, I'm focused on in this base of the spike up here. If the market is going to respect this spike, right? It's going to accept the upside spike. This spike took this high out, this daily high out, and ended at the highs. And the overnight is just trading. It's just trading there inside the spike. That is for me. This kind of days are kind of hard because the market is accepting higher prices. It's accepting higher prices, but it would be different if the market was up here, for example, or down here. The message would be clearer. Right, but right now it's right there. It's right there. I hope you have seen Jim's market update. If you have not, I strongly suggest you to take a look to his market update. He has a market update that he does every Sunday, every weekend, and it helps. It really helps to have a better understanding of what can be going on in this market. I see the potential now that having something that he calls a sequential trade, because we have this highs here, very, very, the odds the market coming back to take this at a high, and then coming back to this one, or it can be the opposite way as well, taking this high and then coming back to take this high. No intraday week levels yesterday, I mean on Friday, but I see is very emotional market. Multiple distributions is one, two, three. Something also from the overnight from Friday's session is this volume here. Boy, this volume was really high on on Friday. Let me see if I have it here. And it happened. It happened this is the second time, right? In less than a week that happens in the closing period of the market. This is between 5:30 and 6 p.m. in the market. My bad, yeah, 5:30 and 6 p.m. right when the market. Am I right? No, it's between 4:30 and 5 p.m. It's really at the close, really, really, really high, really late, and everybody's going. You have huge volume here, and also the closing, Friday's closing has an enormous amount of volume here. Right? This there was just a lot of absorption there. It could have been, um, it could have been usually when the market has this kind. I saw this as a short covering rally. You know, one for once the market has a big retracement, far more than a half back on L, and then you could see the market dropping here, and then it just boom. 5 minutes before the closing, it was way out here. There's no way here. There's no way for any kind of options, um, any kind of options, um, naked options sellers to take cover here. And there would have been crash here. There would have been crash here. There would have been a squeeze here. The pain was extreme here. Now let's take a look to our regular monthly bars here. We were talking that, throughout those days, weeks, even months now, we were talking that this market has gone over. Now you can see a range here 1, 2, 3, 6, 9, 11 months here, the market trading range. The market has gone nowhere. No, but you can't hear the news. The market is breaking. The market is going to the seven inferno, whatever. Right? The apocalypse is here, World War V or whatever. The market is crashing, but the market has gone nowhere. Right? This is the difference between what you see between MGI, market generated information, and what you hear or what you read, what you see in the news and these trading rooms, chats or whatever. The market has gone nowhere. Now, the current month, we have an 11-month range. We have another range inside this range. If we are going to, for example, if I can, I don't know if I can do every 6 months, maybe every quarter. Let's check what kind of, this is a quarter. Hmm. This is even a bigger time frame, right? Okay, but that's not what we are doing here. So we got a range, and we have another range here. One, two, three, four, five, four. Yes, five-month range here. Previously, we had a breakout from this range that has failed, which targets this low. This is 3704. But now something can happen here. Can you see how the previous month, in this case March, don't have excess on the upper side? So the odds of this market taking this high out are really high, right? And what happened when the market takes this high? The trade that was happening before, that was targeting this low, is over, has failed. Is thus That's the information that the market is delivering. This trade has failed. In the same way how this upside breakout has failed and targets this low, if 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 this one take this high out, the downside trade will be over, and this trade would have failed again, or not again, but also, but will fail too. Or that would be the message that the market is delivering. I can see maybe that this range is contracting. You can see it's wide here and kind of like a contracting here around. Oh, and look at this. Look at this highs here. What is this for? Around 4,200 maybe? No, maybe 41, 46, 41. Let's call it 41.40. Okay, 41.40 is a level here. There's multiple highs around this level. One, two, three, four, five, six, seven. 7 times the market was sold around for around 140. That's not something. This is something I'm just catching right now. Let's put a mark there. You know, coincide with this. Actually, that would be the 41.40. Could be the 41. Could be the 41.40. Have that space there. Have that range there. How about that? We have that area where the market is being sold, 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 sold. So there's a lot of it could be another view here could be that this market is selling, and it's getting short, very short in the monthly time frame. You know, the kind of trade that happens in the daily, weekly, and the intraday happens in the monthly as well. And I can see here, I just can see here that happening here. Selling one, two, three, four, five, 6 times sell. And so you can build a market profile here using this kind, a distribution chart using this kind of information as well. I will see what can I get from this. But you can see starting last year, we don't have excess on the upper side. You know, we have excess, but very close to this one. The low is better, and we have this is low liquidation in the monthly. Wow. Okay, that's something I have just saw in this time frame. These are the kind of observations that can give you some additional information, right? Another gives you another perspective of the market. You can see here the market is selling, but it's not getting much, right? Can you see the market selling here, and come back here, selling here, come back here, selling here, come back here, selling, come back here, sells, come back here, sells, come back here, sells, come back here. This looks like a 45-degree trade here. There's a lot of sales shorts here, and the resolution on this one could be to the upside and can be really huge here. I'm not saying that's going to happen, right? So, but just the odds, right? Odds. All right, weekly. After all this selling, right? After all this selling, I saw a range here. I was saying a range here, but now I have another view here. Yeah. So another way to read this information also is, being short is carries high risk, but regardless of that, this market can break as well. Take this high, take this breakout level here, coming to maybe I guess 32 somewhere there, and then you know, and then the short still can be squeezed to the upside. But that's the monthly. Monthly develops takes more time to develop. All right. I don't trade the monthly, but I try to be aware of what's happening in all time frames, at least the major time frames. The weekly, we had last week we had this break, not this break, but this range here, and another range up here as well. We have two ranges. Center of this range is 41.32, and the high of this range is 40.80, something like that. And the market has had a upside breakout here. When markets have a breakout, uh, I start to monitor for continuation. The destination of this trade could uh, target this high, which is also the low of the only gap that can be seen in the weekly time frame as well. That's the only gap that has here, which high is 42.20. That's the potential to the upside. Could keep going here. Now we have this range. The other thing that can happen here is we can have cyber trading, market forming another range here in the weekly time frame, or we can have a downside breakout failure. When breakout fails, it targets the opposite side, this range. If the market comes back below, inside this range, the destination is this low. That's just things that I am aware. Now, right now, I'm going to monitor for the upside continuation here of this breakout in the weekly time frame. We can see the market is trending to the upside. We have 1, 2, 3 weeks in a row going to the upside. It's not rare to see how many. For example, let's take another rally here. 1, 2, 3, 4, 5, 6, 7 weeks to the upside. This trade here, remembers me a lot of what happened here. It was happening the same thing that happened. We have a breakout here. We have a breakout here. Range trading. We have 1, 2, 3, the same thing that happened here. But instead of having an upside breakout, it's have a breakout to the downside that has failed. Uh, I'm not trying to guess what's happened, but I'm watching what the market is doing, right? Because when we have a market understanding, when we try to we know what the market is doing. What we can do is we can get along with the market. We can be part of the market. We actually are the market, right? But many times we don't know what the market is doing, and we are just using the most used strategy, trading strategy there is, which is momentum trading. When the market is going to the upside, most traders buy, market is breaking, most traders sell. But based on what, right? They don't. What I try to do is add context to trade, to price. Now, daily, remember how we had this potential destination about the 41.32 in the weekly, which was the hard back of this range here. We all have this range, we have this high here, high here, low here. 41.22 was right here, right, the center of this range here. And that was the observation from this weekly, this range here. Now, because when I go to the daily, I see a market is barely elevated to the upside. You know, you got look at where this low is, right in 200, right around the 100. The next one exactly to 50. Next one right at the high. Next one right at the high. Previous bar as well. High, low, weak low, weak low, weak low, weak low, weak low, right? All the way down to the 3,900. This market is weak. This kind of like the rally that is happening here is something to be aware of. I wouldn't. I try to be aware what's happening in the daily. I can see weakness in the daily here. A lot of weakness actually. It doesn't mean that I'm going to go short, but I put price in context. The same thing, this is the current contract, high, weak, high exactly from the 50, from the 100. This looks better. The only difference within the current contract is that this low below the gap looks better. There's nothing there. In the adjusted contract, this is a 200. It's this one here. We have get to the center of this range. Market's right there at the center. I would expect some sideways trading here that would rebalance some of the long inventory here, rebalance some of the long inventory here for this market to have some upside continuation. Yeah, but I remember these lows are very, very weak here. If this market keeps rallying, um, that wouldn't be such a good sign for me for the longs. It's kind of like it's getting too fast. You know, too long, too far, too long, too far, too fast. Now, let's go now to market profile. What's happening here? Now we have an overnight. Friday's low is weak to me. Was bought exactly from. It was a good trade. It's not unusual for the market coming back to repair this low. It didn't in session. Alright. This low is very exposed. We have overnight, one, two, three overnight. Look at this overnight here. One, two, three, four, three distributions here, multiple distributions here, but this one has been retraced. This one, half of this has been retraced, and now we have, this actually is good for the market. This kind of profiles here, because what's happening here? The market is going to the upside. All right, the market is going to the upside, and overnight inventory is 100% short. 100%, all of this inventory is selling. All of the overnight session has been selling, 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 selling. You can see the market is settled right there. A weak selling here. So the market, what is the direction of the market? Where the pressure, where the market is pressing to? The market is pressing to the upside. And right now, the market has fuel here. The rocket has fuel to keep going to the upside. There's a lot of shorts here that can get squeezed, keep getting squeezed. Yeah. Remember the big absorption that happened at this level. Mm, I hope you remember that when I show you this, right? A big absorption here. Oh. But also, at the same time, trade is hell. People that is not familiar with trading hates that expression. In the other hand, right, I can see I can see this. I don't like this low here. The way how this market. There's a lot of inventory here, just at the low of the market. No, no taper here. Weird low here. I don't like this word. No taper here as well. And I can explain this. I mean, if I have tried to make sense of this market because this was going to the upside. Look at the amount of inventory that we have here. This period here just added inventory here, so there's a lot around this level. This 4112, this 4112 here. More inventory in the lower side. Look at this weird, very weird buying here. The market just came down here, and the market opened here and boom, rally like how much points? 5, 6 points down here. coming from the center of this inventory as well. Same thing. Um, I will leave this period alone, but all of this is kind of weak. The the funny thing here was that the overnight, not the overnight, but the volume, market volume was very low here, low, all day long, with the exception of the last two periods here. This is 4:30 and this is 4:30. My bad. This is 3:30 and this is 4 to 4:15. The last two periods, the market just boom got 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 good amount of volume here. We got we can see that in we can see that in let's see market volume 27% less at the opening. It was decreasing. Soundly just the last two periods, you got 4 and 14% higher. You know, really, you don't see this kind of volume, this kind of development often. Right? Now, remember this. It's not going to happen often. That's what I'm trying to say. Traders get emotional. No, we have a gigantic rally on Friday. We are going to have the same kind of rally today. But remember, overnight inventory is short, 100% short. You can have a rally here to take care of this overnight inventory. The only thing that we got in this market, this poor high has been repaired. This poor high has been repaired. The gap has been closed. There's nothing on the upside. We got the last poor high at 41.83, right? Before having good excess on the upper side. Good excess there. Now, the other side, this rally, we got weak long inventory here, weak low here, more weak longs here, non-excess low here, have a gap which is a former excess and poor low here. I am going to carry this information moving forward. Alright. The next thing I want to do, I guess I got too much charting here. Let's see if I can remove some of these profiles. These ones are, no, these are just wasting space here. I don't need this one because the market has traded throughout this, has taken care of all this one. These ones, for example, took care of this. This one took care of all of the inventory that I have here. So this one doesn't matter anymore. This high maybe, but it was repaired, was traded through already. So I may have something. No, I want to keep this. I want to remember. What I want to do is I want to remember this breakout here. We got 1, 2 breakouts and this breakout here. Let's remove. Let's see what I can see if I remove 1 month profiles there. Okay, that's good. I still have this one, which I wanted to have. I have this high, 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 high. Now I can see more here. This is too far back. This is February. There's 2 months already has passed. This is even the contract was just starting to trade here. Um, the current contract started to trade heavily the 10th, March the 10th. Right? There was some change in 1, 2, 3, 4, 7. There was change in this market. Change happened here in this period, but which has left a really low, a really poor low here. This ones, unfortunately, I cannot erase this ones. This one doesn't matter. Don't pay attention to these profiles. The 1, 2, 3, 4 up here. Now, what I do here is I use this stream as part. I do this stream as part of my homework. I do not call trades. I do. I try to have a market understanding here. I try to be in sync with the market. And if this is useful for somebody else out there, I hope it. You're very welcome. I hope you can use it. I hope it's good to you. I hope that Friday you were not caught on the short side of this rally here. It was to begin with, I didn't want to do anything with this. I didn't want to do anything with the rally. uh. Now, the market is going to open inside the spike. Opening inside the spike, not inside spike, inside previous day range, advertised chop. There could be a lot of chop. The obsession is when the market comes out of the of the range really fast or really early in the trading session. We have like 2 minutes before the opening. Let's see what we have here. All right, all right, all right. Oh, look at these histograms here. Look how man, this is very weak. This the histograms here. You can see the volume here on the lower side, volume on the lower side, weak lows here, volume on the lower side, no taper here, weird low, extremely weird lows. Basically, even the daily is very weird here. All right, market is right there. Okay, let's see what the market has to do. Any questions, comments, answers? Please just let me know. I'm going to close this. We talk about the possibilities of the also of sequential trade here. Whatever high is taking, the other side could be the next. Market is very extended to the upside. All right, market is open. Oh, look at where that low is. Right, right at the center of the upper range. Can you see? Now the daily time frame is having really good. I can't believe this. I can't believe this. This is what the homework. This is why homework is very important. This. Look at this. This is. I mean, we made this on Friday, right? We got this line from. No, even from. I guess it was from Thursday. And look where this market is right now. God has happened an impressive run in the overnight, a huge break and a huge rally. And the break was very impressive, long liquidation, and it just was. The, all the losses were recovered also in the overnight. Now look at this low, man. Come on. You can see. I mean, it tells me something also here. That who can be. Can maybe some kind of bigger trading here going on. Oh, the gigantic amount of volume that I have here from this day. I mean from the overnight, not from this. 41.30 seems to be going to be. Now, the market trading taking care of the shorts, the short inventory here will take the high here, which in turn is get this high exposed. But I will see, I will be very interested to see what about this. I mean, don't pay too much attention to these numbers, right? I don't trade, my trade is not based on those numbers. I got the impression today that that Friday's rally hurt a lot of people. You know, I have, maybe, the odds that traders were short in the market just because it was too high are high. Questions, comments, please just let me know. I'd love to have any kind. Remember opening inside previous day range advertised shop. We have short inventory, very wide and short overnight range, very wide overnight profile. No excess in the high, no excess in the low. Low is not good, high is not good. Most of the time, most of the time, the trader will be what the trader will be doing is just observing the market, observing, recording data, and this was an opportunity. This was a good opportunity on Friday. Location as well. When the market broke this high, right, we could have bought something somewhere down here, based on the observation that this could be a pullback of this rally, even though it was weak. But breaking this high, market was coming to this high, coming to this. The breakout of this high coincided, right? We still have the 41.32 here. It coincided with taking taking this high, repelling this high, this pull high out and closing the gap. Well, the trade was just that. The trade was closing this high. As soon as this market takes this high out, um, get either hedge or cover or do something here because the trades this day was very risky. In the way how it went to the upside, it could have very well go to the has a gigantic break here. It's not the trading is has nothing to do with, for example, uh, okay, I hold my position here. The next time the market does something like this, I will hold my position. I will let the market have a big range, and then you just when the market starts to break, you don't cover, right? You start to lose here. You start to lose. You have a lose position here, a losing trade, but you don't close because you remember this day. You remember, oh, the market has come back. It's going to come back again next tomorrow or Friday or whatever, right? And the market keep breaking and breaking. I mean, every time, every minute, every 5 minutes, you are more and more underwater, deep underwater. Okay, this high is not good. We have this also this market comes to close this high, and the potential coming back to repair. This is the last non-excess high in this market here, the 41.80 up here. High is not good. Boy, you have good volume here. Wow, anything. I think anything happening today would have been better than this day. Look at how low this was relative to this day. And so I would consider coming back to regular volume around 5,700,000, something like that. I wouldn't be surprised. Now the high is not good. That high has low odds remainder. That's a weak high. Weak high, weak low. Traders do what works until it doesn't work anymore. Everything that we have this market was a breakout. Gold is breaking, is having a sharp break. Bonds, I don't believe. Well, just crude oil. Crude is very, very high. But we got this news that OPEC is cutting production. That makes sense. Um, I don't know. Let me see if I can make this days smaller here. I just care about one, two, three, one, two, three. I cannot. I want to get rid of these days. I didn't save me too much space. I want to see this day. Now the market has come back to the breakout failure level. Has it? Now remember we have this breakout. Yeah, we have this range here. This high, remember this high here, which was December high. We have an upside breakout that has failed. This has failed, and we are at that level now. Market is testing that high. And look at this. Gosh, look at this freaking market up here. All right, officially the downside trend, in the monthly is over. Right? We are not trending to the downside anymore. We are the most favorable thing, the most positive thing would be range. Yeah, this high. Can you see this breakout here? Can you see this level here? This is just technical. I'm just making technical observations here. Right? Don't get too much focus on this stuff. Oh, come on. Coming back to this break, what is if it is above, will be low. Look at how this, we are right there. 41.32, just above half back from in the daily, right? This is an oh boy, look at this. This is a very relevant level for all time frames. The monthly for once, there's a lot of selling that was coming from this level. We have seen that right today, right? We just noticed this today. One, two, three, four, 5 times selling from this level. The weekly has that level also. Now right now it's right there. And the daily. Gosh, gosh, gosh. So there could be a big break from here, which would mean upside continuation, no break, breakout from this level. It will still have, can you see that this market still has potential for another breakout here, right? Which will mean an upside continuation. If if that doesn't happen, we also have potential for a breakout, a big one as well. But remember this, V-shaped markets don't happen that often, right? What I mean with that is, what I mean with that is that the market coming up this, my bad, those are no goods. Coming back up here, going up here. Oh, come on. Market doing this and then doing that. Those are not often. Doesn't happen often. Okay. Usually, remember, market cap this, have a range, and then from here you have an upside breakout or a downside break. Any of these two things can happen. We never know what's going to happen, right? But this is more common. And the other hand is we have this one, right? Have a range here, and from here it can go higher or it can keep going lower, right? But these ones are the odds of this happening. Remember, odd thinking always, probabilistic thinking is what we always have to develop. Odds here are low here. This one, the odds for this kind of developing, you know, the odds of this are higher. All right. In the long term, it will help. I'm not saying that's going to happen. I'm not saying that that cannot happen. I'm just saying this, kind of speaking about odds. I'm telling the odds. Very, very, very. This profile, this histogram is something I don't like. Something that I also forgot to mention today. Let me see. Let me minimize this and pull my is VIX. VIX is high here. VIX is around 20. The market has had a good rally here. It's a really spectacular rally here. I remember 945. What do we have? PSM, ISM, right? PMI, my bad, PMI. 945. What the market is doing? Let's see what the market does here. Have you forget about that? PMI 9:45 a.m. And at 10 we have ISM, manufacturing index. The VIX is high here, and I think it's the first after a long time we say this because there's huge risk in this market, and the VIX is quite high. Now, which means that there is a lot of puts here out in this market because traders see or investors see this market with a high as a high risk market. Because the VIX actually, what the VIX actually does is measure the amount of options being bought in the market. I supposed to be that's how they measure risk. It's not a good index uh, uh, most of the time, but I see that I believe the VIX is reflecting the risk now. I think that's more likely. That's a good number now because the risk in this market is high. It's very risky. Okay. Now the market has took this high out, has took the high out. He's having a break and he's having an upside breakout. No? That's what I mean with the upside breakout. Many times also traders can misread this rally, the rally that's happening here. Not that the market has ignored the overnight inventory here. The market actually has is short covering the overnight, all the short that happened in the overnight. There's a lot of shorts in the overnight. The whole session, the whole session was short. No revisit prominent overnight PSC, very close to half back. I will call this also white, white for three overnight low. This one, I will carry that information. I'm sorry for that. Look at the volume there, man. Look at the volume. Relative. Now, let's take a look at something here that we always do. Relative to Friday, this day seems like it's going to have a lot more volume than Friday. About two-thirds of the session of the period has passed. We are down here. Could be kind of like up here. Could close up here. That would mean like almost how much? 40% higher than Friday. Really high volume relative to Friday. The odds for upside continuation are there because this still the market can still have another breakout here, keep having breakouts, keep going to the upside. It has it has technical reasons there. There is there. Right? Now value is overlapping to higher. The lowest, but I don't like that low, man. If you're long in this market, you know what the risk you're taking, right? What you don't want is the market coming back inside previous day range. That's what you don't want. That would be an out. And a strong market does not come here. This market this market came up here, traded up here, boom, is having a breakout. I wouldn't want this market. To keep my long, I wouldn't want the market coming down here. Any questions? So if you are short in this market, why are you short? Or why are the reasons why you are short? Did the market give you an opportunity? Did the market tell you something about being short? The risk of being long is high, but it doesn't mean I'm going to go short. I'm going to be short. There's no reason to be short in this market. The pressure is to the upside. Market is going to the upside. Is the rally weak? Yes, that's true. The rally is weak. It's absolutely terrifying weak. It's terrible, terrible, terrible way to go into the upside. It's not a reason to go to be short. I guess the next thing would be Halbach closing the. Can you see here this piece of information here? This is Halbach. Traders know where Halbach is. It's too far back, okay? This is not as relevant. But traders know that where that is. I don't call it Halbach. And it is also the closing of the distributions of this day that has a poor high here. Uh, Market is in short covering mode. And still it remains, the market has not formed a day that looks like this. Hasn't formed a day like that, like P shape. Hasn't formed that, right? It's short covering day. It hasn't formed. It hasn't formed. The market hasn't formed that day, a day like that yet. But the market is in short covering mode. It would have been, just imagine this. This would have been the uh, daily session. Remember, we have ISM soon. A day like this, right? Come on, what happened here? This, if this market would have this long, this single prints would have been a short cover. This is not. This is not short cover. This is not. This is, if any, this is just absolutely 100% short inventory in the overnight. The market is taking care of these shorts. To do that, or by doing that, the market has took this high. By taking this high, the market has ended the downside trend in the monthly. By taking this high out, the market is continuing. It's having upside continuation of this breakout, of this range in the daily, in the weekly. Right? All of these things happening. This is what the market is doing. Why I'm going to be short here? I don't want to be short here. If I am long, I'm aware of what can happen. Right? Okay. 4 minutes for 4 minutes to ISM. You know, ISM at 10 p.m. I mean 10 p.m. 10 a.m. Days like Friday, days like this, these are the days we live for, right? This day here is a development that has started here. This day, everything start market changed here, changed here. It has left a very weak low here, poor low here, weak low here, weak low here. Another weak, another weak low here as well. Mechanical, not a weak. I won't call this weak, but mechanical low, which is weak, right? Oh my gosh. ISM coming. Less than 2 minutes. Remember, don't look at the number. Just what are the odds here to the upside? You got this hardback. Let's see if there's any rally. Market closing these distributions here. Why this is important? Selling from this level will not be a good selling because it's very mechanical. And also at the same time, if the market comes back inside, take this low out, it targets actually this high, which is very mechanical in the upper side. But notice how much time has passed for the market to take care of this low. This happened in February 16th, no? Month and a half later, well, not, let's remember SpongeBob, 6 weeks later, okay, the market is taking care of this. It's repairing, finally, it's repairing these highs, right? These poor highs. That gives you an idea that having this kind of lows, having this kind of poor non-excess lows, weak lows here, weak lows, and not necessarily the market is going to come back right away. But this is information that one carries forward. All right. Now, another relevant level that I watch here is this one's up here, this level here. This huge amount of volume here in the overnight out closing. This is the second time. As I say, I am observing what was happening in the last two periods after the market close, which I consider is the overnight session. Because if this kind of things keeps happening, what would happen is I will start to watch. I will start to adding. I will add more periods to this session here. All right, ISM. Hmm. This reaction, the reaction we're having here, maybe you can see 10 a.m. and not too much movement, right? Kind of maybe that report wasn't a Goldilocks, was a Goldilocks number. Yeah. Hmm. Not so bad. Maybe a little bit good or better than expected. Don't know, but that's what the market I can get from the market from reading this market. From reading what the market is doing here. Any questions? Answers? So my question is, why would you short this market here? Why would short this market here? Having the overnight session like this with a lot of short inventory, having a reaction of the market, counteraction to the overnight inventory, breakout of the previous day, breakout on the monthly. Now this could be an upside breakout failure as well. Mm. I got this high here on the upper side. Oh, that's the. Oh, what is this 27 high here? What the heck? This 27 high is actually from the previous contract. This 27 high is up here. So the market could come. Maybe this could be a good destination. Taking care of this or repairing this poor high here. It can also another thing that remember we talked long time ago was this is question. I wrote question over high here because I saw these highs here, one high, two highs, and three highs, and the potential of having stops on this area were high at the time. But remember, almost almost 2 months have passed from this level. It's very, you know, not that there are not stops here anymore. Right? I'm not saying that, but good amount of this selling more likely has been already covered somewhere down here. Right? And look at this also. What happens in the intraday also happens in all time frames is uh, it is that you got these poor laws here, right? Let me remove this drive here. You have this pure law here, so that you believe that the market is actually this the odds the market taking these low outs are high because you also have these laws here, um, and you just keep your position, right? No, the odds are high. Just keep the position, and now if you are short here, remember short this area here. Now the market has restricted most of the whole thing. You know, the greed thing that happens when a, you have a position that you have profit in your position. Um, you don't take profits or you don't cover or you don't hedge. Is that this happens to all of us, not just to the short-term traders. This happens to everybody in all time frames. Right? It's not a characteristic just of short-term traders, just from us. Right? It's for everybody. It happens to everybody. Now this law, very, very, very ugly, very ugly histogram here. Notice how this law is non-excess, lack of taper, weird, uh, weak here, lots of volume, weak, weird. Ah, boy, no, come on. But what the market is doing, market is going to the upside. Still, this is crossing, this is hard back, also crossing distributions of a day that is way far back to be of relevance now. I don't give too much weight to that, to this observation, yeah. But I grab it, I see this one here. If I see the market trading or doing things around this, let's take that low here. Oh, come on, man. No, look at this. Can you see this value area low here? I just put this value area low. And look at where the selling is coming from. The value area low. From a day that is 2 months back. 2 months, unbelievable, man. How can you sell this market here? You cannot be I mean, I mean, there's no reasons to sell this market here, particularly from this low, this low. Come on, really? Ah, I'm doing this blue just to know that this is valuated low. Okay, I don't trade that, but I use that to see how what the market is doing. The selling that's happening here could be the selling that traders are short in the market, getting short just because the market has a huge rally. That's not no reason to go short. That's not a reason to be short in this market. Now let's take a look at what happened. ISM. What is this number? What is that number? Manufacturing, that was PMI, ISM manufacturing PMI actually 46.3. Forecast was 47.5. There's some reduction there, which means good thing. Well, because the market is not is cooling. The economy is cooling. Remember, that's what the Fed is trying to achieve. It's trying to cool down the economy. Consensus 47, 50. Forecast was 49. Huh. The forecast was 49. And we also have 46.3. Okay, makes sense. I guess a bad number would have been maybe 40. But that would be too much. Too much. That would become. Look at what happened with gold. Gold is around 2000 now. Has recovered. Remember when I said that gold was having a break? And now it's having an impressive rally. This low to me is weak. Today's low is weak. Okay, it is 10:20, 10:20. It's 10:10 a.m. If you have any question, please let me know. Otherwise, I will be calling the morning stream. And wish you guys a good rest of the day. All right. Have a wonderful rest of the morning. Stay safe out there. Notice you got 4150. This is a very mechanical level here. 4150. I'm going ahead and marking that as a high volume as a high volume. Before I leave a high volume, what it is, this level 4150, high volume level here. I need to change this line color, label color. I'm gonna call it here. Uh, high volume level here. Save settings. This one. And just because of, can I see? I don't see too much. I would like to see maybe the 10Ks here. Very mechanical trading here. A big volume here, buying again at this area. 40.45, now 40.50. If you start drawing if you don't have market profile software, do it by hand. It helps. It will help a lot. Remember that these histograms here can be of use, but if you don't have this one, keep watching the market. It is possible. I think Thinkorswim has some kind of um, I don't know how can be how uh, oh I don't know how we can use this. Let me see what I'm trying to show. What I'm trying to show is has book maps. This could be misleading. Well, some form of, if you want to build this histogram, maybe you can put this in let's see 4150. Where is the 4150 here? 50 is here. No, I don't see nothing here. No, this is what is here, for example, right? This is a total volume. This is total volume, but I see a little bit deeper here. Not really see, oh, there's a big volume here. The market is coming back. There's a big volume here, market is coming. This is. I don't use this, but I don't. I am trying to see. What I'm trying to do is trying to see how can I get something from this kind of charts. Oh, this is 15. Aha, 30. No, there's a lot of congestion here. I can see a lot of congestion here. If any, this looks like it could look like a shell. There's a lot of congestion happening here in this area. Huh. No, I don't. I forget about this. I cannot say nothing. This. Hey, Luis Fernando, ¿cómo estás, man? No, no problema, buddy. It's okay. Now, the low of the high has been taken. Remember, it was evaluated lower, low odds there. Market keeps having the breakout here. These shorts are feeling. Another thing that happens here is that uh, the shorting that traders can be doing in this market actually fuels the rally. You know, you can see you can see what this market is doing here. Market is going to the upside very weakly. It's like running. You're driving a car really fast uh, by the edge in the driveway, in the in the road that that has a abyss on the side, that you can just uh, it is very dangerous here, right? But that's what the market is doing. This high has been repaired. It is better now. At least it has some salt something from here. It's not enough reason, as I say. I'm not looking to short the market, but I am not willing to take, to go. But the market is going to the upside. The pressure is to the upside. Ahí, hermano, bien, bien también, batallando como siempre, ¿no? Siempre lo que me gusta de este negocio, de este trabajo, es que siempre uno está aprendiendo nuevas cosas. Siempre. Lo escucho de personas que tienen muchísimos años, que tienen décadas trabajando en este negocio, que siempre uno nunca termina de aprender. Y una de las mejores posibilidades que nosotros podemos tener para aumentar nuestras probabilidades, es permanecer lo más neutral posible, ¿no? Cuanto más neutral posible esté uno, yo creo que nuestras probabilidades, estoy de acuerdo con eso, que nuestras probabilidades son mayores. No significa que vayamos a trabajar en una burbuja, porque tenemos que estar bien informados de lo que está pasando afuera. ¿No? ¿Cuál es la opinión de la calle, ¿no? De la mayoría de la gente? ¿Qué están diciendo las noticias constantemente, ¿no? Pero también recuerda que cuando ves una noticia, algo en la televisión, especialmente si es un noticiero o un periódico, eso ya pasó, ¿no? Eso ya está en el mercado, ¿no? Eh, eh, la rapidez con la que algo se absorbe en particular en el IES, ¿no? Es impresionante, es súper, súper rápido. Comentaba alguna vez que, no, creo que a ti te comenté que, o sea, acá me enteré del fallecimiento de Maradona, por decirlo, ¿no? De Diego Armando Maradona, como unas 6 horas antes de que salieran las noticias. En las noticias que uno escucha en la tele, en la radio y todo eso, ¿no? Todo el mundo estaba viviendo su vida tranquila y Maradona ya había fallecido. Y cuando se empezaron a escucharse los flash informativos, primicia, que esto, habían pasado 4 o 6 horas, ¿no? De ese evento. Entonces, imagínate si es así como pasa ese tipo de cosas, ese tipo de noticias, si un evento como ese, que no tiene quizás ningún impacto en este negocio, se demora esa cantidad de tiempo en aparecer en los outlets de noticias o informativos que puede haber, imagínate lo que sí tiene relevancia, ¿no? Es súper rápido, a veces son segundos, ¿no? Antes de que el mercado lo absorba. Entonces uno también tiene que estar constantemente recibiendo información y para no, a menos yo lo que hago ahora es no para trabajar basado en ello, sino para no estar en una burbuja, para no trabajar en una burbuja, porque si me voy a encerrar y voy a trabajar solamente mirando lo que pasa aquí, de repente este mercado, ¿cómo cae acá, ¿no? Y en 2 segundos viene hasta aquí, ¿no? Y entonces, ¿qué pasó, no? Y si no estoy atento, y si no hay nada, digo, ¿qué es esto? Entonces uno empieza a buscar información, ¿qué hay, ¿no? Porque si es basado en algo, en alguna noticia que pasó por ahí, muy probable que, así como cayó, a veces estos mercados tienen se llama un knee-jerk reaction to what happens. Es una reacción a algo, a alguna noticia y así como cae, después se recupera que puede ser muy distinto a algo estructural o cuando en este caso este mercado está super long, por decir, no, ahorita no es super long y puede una noticia importante se puede traer abajo todo esto que está pasando ahorita. Pero hasta eso es parte del negocio. Y hasta que eso pase, no voy a esperar que eso pase, ¿no? Entonces uno se mantiene atento. Ah, estoy bien, gracias. Esa será la respuesta. European Central Bank está diciendo que puede haber un incremento de 50 basis points. Hmm. Esto puede ser. Puede ser que el mercado esté mirando este nivel ahora, 41.83. Es el último de los tres pull highs. Okay? Market is having that upside continuation here. And the fuel, the rocket, las, las, el combustible que impulsa este rally, ¿ah? Ya, son los shorts. O sea, no, imagínate, ¿no? Vendiendo de este nivel, el cedo, están vendiendo. Es cierto que esto está súper weak acá abajo también, ¿no? Pero lo que está haciendo está liquidando, no está liquidando, está short, this is short covering, right? O sea, esto proporciona el combustible para, por decir, este rally. Ahora, lo que pueda venir de aquí es muy poco probable ahora, por decir, que estos shorts estén todavía en el market. ¿Ya? Ahora, una forma de ver que estos realmente puede que todavía estén, ¿no? Muchos no se cubren de inmediato, ¿no? Este mercado está muy alto, dicen, este mercado está muy alto, va a caer, entonces voy a estar short aquí. Y una forma una forma de ver que estos definitivamente están afuera es cuando tienen unos spikes, tienen unas subidas abruptas, ¿no? Puede estar aquí, por decir, sabíamos que este nivel estaba muy débil acá. eh, Cuando, si tengo un long, yo aquí, si estoy long en this market, si el mercado empieza a vender de este nivel, es muy poco probable, es muy poco o muy probable que el mercado vuelva a tomar esto, regrese y repare esto. Y ahora vamos a ver si alguna venta viene de aquí, ¿no? Viene de aquí, de este nivel que es halfback. Significa lo mismo, el mismo tipo de venta que pasó aquí vuelve a pasar más arriba. Y sigue proveyendo el combustible para irse para arriba. Porque short covering es eso, ¿no? Short covering es solamente o sea, all business o negocios antiguos o inventario, short inventario que está siendo removido. La mayoría no son nuevos. Ahora, mira, mira esto. Ok. La cantidad de volumen que está viniendo aquí comparado con viernes. ¿Te das cuenta que es básicamente el mismo nivel que tuvimos aquí cuando estaba bajo esto? ¿Ya? Pero relativo a viernes es como 30%, yo diría 30%. Déjame ver. Oh, 38%. 38%. Wow. Muy alto. Relativo al viernes. ¿Ya? Entonces, ¿ves la cantidad de volumen que viene aquí? Un volumen bien alto. ¿Ya? Un volumen bien alto que viene acá arriba, acá arriba, ¿no? Acá arriba viene el volumen, empieza a venir el volumen alto. ¿Y qué pasó con el volumen aquí, ¿no? Cuando estabas bien abajo? Si vas a estar long, ya long es estar, crees que el mercado va a va a ir para arriba. Si va a estar long, ¿dónde es más conveniente, ¿no? ¿Dónde tiene uno más odds, más probabilidades? ¿Acá o acá arriba? Pero eso es momentum trading. Momentum es la estrategia que más se utiliza, más se utilizada en el mercado, ¿no? Saber cómo está, qué es lo que está pasando ayuda muchísimo. Porque el riesgo que está uno tomando, o el riesgo que toman los loans aquí, es increíblemente alto y no saben muchas veces el riesgo que está tomando. Entonces, ¿cuál puede ser algo que esté mirando este mercado? ¿No? Conversamos que es este nivel que es puro, pero es muy distinto a un nivel como este. Y acá tienes buen exceso en la parte de arriba, probabilidades que acá pueda haber un bunch de stops aquí también es alta. Pero más que está mirando esto, esto, esto de aquí. Mm. El mismo tipo de trading de viernes aquí. Estas opciones de 41.80 estaban 30 centavos o punto 30. El mismo desarrollo del viernes. El viernes lo que estaba mirando yo era estas 41.32 aquí. Y empezó así también 41 con 30. En este caso no era 30, era como 70 centavos, una cosa así. No 70 centavos, sino punto 7. Punto 7 y llegó hasta el 5. Llegó hasta 3, 4, 5 y después el sideways trading como este llegó pues cerró en 10. Entonces pueden estar, o sea, traders hacen lo mismo, hacen lo que funciona hasta que no funciona, hasta que deja de funcionar. Y, y lo que les pasó aquí en este día, lo que pasó aquí en este día, que es todos estos shorts que tuvieron aquí de este día anterior. Oh my God, what the heck happened? Lo que pasó en este día, todos estos shorts, todos los shorts que aquí fueron atrapados aquí. Y ahora, ¡pum! Se están, el pain, o sea, el mercado, los zapachos, los aplastó, ¿no? Aquí. Después unas pérdidas grandísimas de ese tipo de trading. Y ahora lo mismo puede pasar, pero en el sentido opuesto. Ahora, no digo que vaya a pasar, ¿ya? Pero la forma en la que está este trading está se está volviendo muy riesgoso aquí. Mira cómo se vende aquí. Ok, alright. Ok, Luis Fernando, entonces ahí nos vemos, hermano. Que tengas un buen resto de la mañana y que tengas una semana excelente. Bye bye. Hope to see you later today.